Alright, welcome inside of my screen to yet another trade review on this is a trade review on GBPUSD last week price action. Also last week was NFP and I was expecting higher prices on GBPUSD. So first thing first, I'll run through the steps that I like to consider before looking for a trade idea, which is first I need to ask myself this: what's the DOL? So what's the DOL? Meaning, what's the drawn liquidity? That's the first question I like asking myself on the higher time frame. Then the next thing I want to ask myself is, what are we respecting? What are we respecting? So that's the next question I want to ask myself, and the next question I'll be asking myself again is, what is the bias? So these are the questions I like asking myself. Then once I provide answers to these questions, then the next thing I want to consider is the key level that is likely to be used. So these are the questions I like asking myself on the higher time frame. So there's this thing I like to tell myself whenever I'm looking for a trade idea. At least I should know where the higher time frame is heading. So once I can identify where the higher time frame is heading, weekly or monthly, once I can identify where the higher time frame is heading, then I can now go to the lower time frame to frame a trade idea in the direction of the higher time frame. So with all these things said, looking at the weekly chart, last week I was looking for higher prices, which means my drawn liquidity will be above previous week highs. Then what are we respecting? You can see that we are respecting the lows. Price is failing to break and close below the lows, and also in the recent price action, price has been inside of this candle for 2 weeks before last week price action came in and respected the lows and closed back above the range, closed back inside of the range rather. So you can see we are respecting lows and breaking highs. So what is the bias? So the bias of this weekly chart is what's bullish. We're having a bullish bias. Why? Because we're respecting lows and breaking high. So what key level is likely to be used? So if you can see here, this down close candle, this weekly order block, took out multiple lows. It took out these lows, and it took out this particular candle low to the left. And now the following week did what close above the opening price, and also this candle did what close above the high of it. So it is making this candle a what's bullish weekly order block. So that's the key level that is likely to use to push price higher. So with all these questions answered on the higher time frame, like what is the drawn liquidity, what are we respecting, what is the bias, what is the key level that is likely to be used, once they are answered on the higher time frame, monthly or weekly, in this example it is the weekly, then I can now go to the what lower time frame to frame a trade idea in the direction of the higher time frame drawn liquidity. So on the lower time frame, 4 hours, 1 hours, or even the daily time frame, I'll be waiting for a clear what time and turtle soup. So let's see the daily first. Excuse me. So on the daily time frame, if we zoom out and zoom back in pretty nicely, you can see that price did what reacted off of this rejection block here and expand higher. Ever since then, price has been consolidating above the 50% of this swing low to the swing high. So last week, starting from here, this is Monday. So if we put the vertical line here, weekly range, put it here. So that's Monday. So last week opened and aggressively we dumped below that. We dumped to this old lows here on the daily chart, which is what sell side liquidity, and Tuesday took it out, creating a beautiful range into this daily fair value gap. So you can see how I marked that key level out in with this horizontal box representing the fair value gap, and it's below 50% of this impulse leg up, this expansion. It is below 50% of it. So this is a beautiful daily range into a key level, and it is happening on Tuesday. So on Wednesday, likely there will be a time and turtle soup on Wednesday for me to frame a trade idea, since the high time frame drawn liquidity is bullish. So you can see here we have a beautiful Tuesday range to be traded on Wednesday or Thursday max. So I like looking for my trade ideas from Monday to Thursday. So if I don't see anything within those days, I just leave the whole week to play out. So moving to the 1 hour, since this is a daily range that we're seeing here, daily high, daily low, you can see I marked out the low and Wednesday came and took it out. So if we mark the daily range high and we go to the lower time frame and we go to the lower time frame, let me make this to be visible on the lower time frame, 1 hour. All right, so this is the key level, which is the fair value gap, FVJ. So if we go to the 1 hour, since it's a daily range, 1 hour will give us a clear structure to work with, where we can look for turtle soup, breakers, OT, and everything, or even the 15 minutes. But let's see the 1 hour. So on the hourly, you can see clearly after we hit the key level, the daily key level, which is fair value gap, we created a beautiful range. This is range high, range low, price left range low during Tuesday, middle of the day, and shop, and price came back on Wednesday at 3 a.m. Nice time and turtle soup in play here. So on the lower time frame, I can obviously see a time and turtle soup, and it is happening during what's 3 a.m. The 3 a.m. candle gave us a beautiful time and turtle soup. So you can see it this week right here was 3 a.m. candle. Immediately sweep this low and the close above this candle, you're bullish, and also immediately close above these highs, you're bullish. So we can look at the 15 minutes to frame a model 1 entry, or 5 minutes. So let's mark the manipulation time, which is 3 a.m. here, using 4 hourly. Yes. So if we mark the manipulation time and go to 15 minutes and zoom out, during 3 a.m. here, you can see we had the liquidation by 3:15. Exactly 3:15 was when they took out this low. So immediately price closed above this one particular candle. That right there is a model 1 entry. So this is the only trading model I use, which was pioneered by Romeo, the author of Turtle Soup and CRT. So this is model 1 entry. Is this the model 1 entry? So entry at the close above this candle, that's the entry. So your entry is there. and your stop loss is that one particular candle low. That's the stop loss, and targets the high of Tuesday range, which is somewhere around there, for a beautiful 1:5. But range trading rule says you take out 50% of your position at the words 50% of the range. So there's the 50% of the range. So taking out partials at the 50% is a beautiful 1:2. And if you hold your trade to play out for the whole range, is a beautiful 1:5. So for zoom out pretty nicely, you can see how the whole thing played out. Beautiful trade. Back here on Wednesday, holding to the weekly close. That was a beautiful trade. So a quick recap on how I look at price and how I like looking for trade ideas. So if we go back to the daily and zoom back in to explain everything further. So first of all, I want to understand where the higher time frame is headed to. Then I want to know what is my draw on liquidity. After that, I like to ask myself, what are we respecting? And moving on, what is the bias and the key level that is likely to be used? So if I've been able to answer those questions, then it will be easy for me to wait for a trade idea to show itself to me on the lower time frame, from daily all the way till 15 minutes. So basically what I'm waiting for is time and touch soup to play out in the favor of the higher time frame draw on liquidity. So basically that's what I do. So, and repetition of one particular thing equals mastery in trading. So with that said, thank you for watching this trade review to this very point, and I love you, and good luck and good trading. So watch out for the next trade review.